You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. If you're paying $0 to trade options, you're paying too much. That's because at public.com, you can go a step further and earn rebates on every single contract traded. No commissions, no per-contract fees. That's table stakes. When you place an options trade at public.com, you not only don't pay, you earn a rebate. And those rebates can add up fast. Public is the only options trading platform where you can earn rebates. You literally won't find a better deal. So, switch to Public and start getting rebates on every single contract traded. Or stay with your current options trading platform and leave money on the table. The choice is yours. Public.com. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back. Once again, it is Friday, it is noon Central, it is 1 p.m. Eastern. You know what's popping off in Vol Town? Well, let's find out together, shall we? It is time once again for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from theoptionsinsider.com. A couple of things to remind you of right here at the top of the show. Hey, if you're not listening to the full network, man, you are missing out. Nearly a dozen other programs. Been hitting on vol on a lot of other programs. Crypto, check. A lot of vol going on there. Futures rundown. Man, VIX pops in there all the time, it seems like these days. Talk vol nonstop on This Week in Futures options out there. So if you, of course, the option block. So really, it's a whole network full of vol these days. So if you're not listening to the other shows, and you know who you are, hardcore vol views people, then you're really missing out. And of course, speaking of missing out, if you're not part of the pro, you're literally missing out on some awesome stuff. I will be joined right after the show by our good buddy, the Oracle of New Hampshire, Mr. Matt Amberson. Guy can't get away from unusual activity. He's talking about slinging strangles, all these crazy things. How's all that working out? What new crazy, what was that crazy name he came up with yesterday on the option block? It was bonkers. The premium harvesting one, paying ridiculous premium ridiculous dividends every month. You got to check that out. Theoptionsinsider.com/pro is the place to go to hear that. As we go around the horn, see who's joining us on the old program today. First, let's go out to the stormy shores of Maine, the perfect place, dare I say it, the perfect lair for the Dark Lord of Volatility to rest his head and hatch his evil schemes. Yes, we are joined once again by the Rock Lobster, a.k.a. the Dark Lord of Vol, Mr. Andrew Giovinazzi. He's the one single-handedly driving this market down today. Mr. Rock Lobster, it is quite fitting that you join us on the show today.
You know what? It is a pleasure to be here. We do kind of have a dark and stormy market day. We will dig into it. I will tease the listeners to continue to follow.
A little bit of a tease as we also find out who's joining us holding down the UVX hot seat, which means he has to talk nothing but international vol for a full hour. None other than our old pal, Mr. Jim Carroll from Ballast Rock Private Wealth. Haven't talked to him in a while for the better part of this year, since back in March of this year on VolView. So it's been a while, Mr. Jim. Welcome back to the show.
It's not possible that it's been that long.
Well, they kept trying to book you, and I was like, I think we've had our fill of that Jim guy for a while. But, they finally overruled me. And, the producers have the true power here at the end of the day. I'm just the voice on the microphone. So they decided it was time to bring you back. So I had to agree as we keep on rolling right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we do just that. We break down what the heck is lighting up the tape out there. And man, if you were waiting for a little vol to pop on your radar, if you were maybe bored by all this green on the screen and this vol annihilation, if you were having PTSD flashbacks of the beginning of 2017 when Trump took office and vol went to die, well, then today is your Huckleberry, listeners. The market's no longer green, pretty firmly in the red. S&P off over 80 handles today, almost 1.5%, about 1.4% right now. The NASDAQ off 2.33%, Dow off 0.75%. So just no sooner do we kiss 6K in the S&P than we wave it bye-bye back below 5,900, actually closing in. Did we get to 58.5 today? Let's see. We're threatening the 58.5 level out there, about 58.60s range right now. Listen, let's see. Did we get? No, we didn't get quite that. The 58.61 was the low. But who knows? At this rate, we might break through it later on today. A lot of red on the screen. Our old pal, small caps, not immune as well, off nearly 1.5% out there today. So just a drubbing across the board. NASDAQ, of course, taking the bit in his teeth, off 2.33%. All that red on the screen means some welcome green on the vol screen again, unless you've been playing a lot of downside, which some people have been, in which case maybe not so happy out there. But hey, you can't be mad. You've had a good run over the past week and a half. VIX cash getting a little frothier again. We were playing with a 13 handle yesterday. I think we got to the high 13s yesterday, which is just crazy town out there outside of, let's say, December or the dog days of summer. Today, not so much, 1675, so feeling good and frothy again today. That puts it up exactly 1.75 points from where we were this time last week, listeners, and obviously markedly higher than where we were yesterday in VIX land. Let's just see yesterday. How low did we go yesterday? We got to 1366, listeners, so my goodness. They were coming for vol, but it always surprises me when they come for vol that aggressively the day before Friday, the day before we really start taking the weekend out, because you still have a whole day to go. Obviously, Powell throwing a little bit of monkey wrench into the works out there today. Powell not going down quietly. He's going down swinging, taking the whole market with him. VVIX 108 up a whopping 20 points. So just when you're starting to think maybe vol season is done, vol, stick a fork in it. Nope. Roaring back to life today, up 20 handles to a 108. So a lot to unpack. Jim, you picked a perfect time to come back on the show after your 9-month nearly hiatus. Before we get to today's action, we had a great vol spectacular last week on election night. A lot of great guests joining us from all over the globe. We didn't have you on that show, so let's start there. Walk us through your reaction to just the whole election madness. The market's rallying day of, day after that. Vol getting taken to the woodshed, old Yeller style, and now roaring back to life today, sir.
What the hell's going on? It's just not fair.
I think we have a title for the show. What the hell's going on?
It was a classic event fall setup, right? You've got this seemingly binary event, this election. We're teetering on the edge of our chairs. Who's going to wind up in the White House? and a fair amount of hedging going on. The VIX term structure was flat as a pancake, less than 1 point from the low to the high across all the months. And then boom, the event is concluded. And I'm not sure that the vol crush would have been significantly different had the outcome been the other direction. I think it was a massive sigh of relief. Now, clearly, had the Democrats taken the White House, there might have been a little bit of civil disruption from Trump's followers, and so we escaped that. But the magnitude of it, I think, was clearly kind of a pro-Republican, pro-Trump vote. But man, we have kind of reversed it fairly quickly with yesterday and today. So is the honeymoon over already?
That was a short honeymoon. They didn't even really get officially married yet, and the honeymoon's already over. He hasn't even stepped into office. But you're right. I kind of was wondering that myself. If the election went the other way, let's say it was resounding for Harris, would the results for the market have been markedly different? There was that old adage. It used to be Republicans were good for the market, Democrats were bad because one had different spending. They both spend like drunken sailors now. So I don't know if that adage even really holds water anymore. So I think you're right. I think it was mostly relief that A, this thing was over, and B, that it wasn't torches and pitchforks, right? It was a relatively, at least seamless, it appears to be on the surface, a transition, which we haven't had since the last time this happened, which is interesting to see. Mr. Rocklops, you did join us, I should say, on the Election Night Spectacular. So an intriguing vol annihilation. I know you were like me. You had a bunch of 17 puts in your back pocket going into the election, so you probably did pretty good on those. But now we're seeing a little bit of chop, a little bit of churn, maybe a little bit of blood in the water out there again. What's catching your eye in the vol markets today, sir?
Yeah, I did something I don't normally do. I closed them all yesterday when VIX traded in the 13 handle. So I'm kind of happy today.
You waited a long time. I took mine off a couple of days or so after. I took some off the first day and the rest 2 days later. I'm taking my money and going.
Yeah, I closed everything in November yesterday. I'm like, okay. And normally once you get in kind of like the zone 1 area, when you're starting to tickle it, I don't like it when the vol trend stops going down, and I'm like, okay. And then my patience for holding them gets real short. Like, so VIX is 16, like 17, 16, 15. I can, not that big a deal. Once, 15, now 14. Once you're 14, especially when you haven't seen the 12 handle in 3 or 4 months, it's been a while. There's no lock that VIX gets back to the mode, to 12. And that straddle was 30-day straddle was getting down to about $1.50 in SPX, and like, I would even have given it like, every FOMO person in the world that missed, the rally, could take SPX up 150 points easily. So anyway, I did close all my no's. So I was kind of happy about that. Now I'm looking at kind of December is starting to look okay. There's some interesting plays there. But as far as the election goes, kind of, if Harris was elected, I think vol would have ended up going down, but I think we might have had, maybe the market sells off a little. I mean, the reality is whoever was running the administration now is probably going to be running it when Harris is there. People can argue about that, but since I didn't hear anything different on the campaign trail necessarily, I'm just assuming the same. And stocks did okay. But at the same time, we'll see how it all plays out. I think part of this also is, there was some pretty euphoric good feelings here right away, and it appears, I'm not going to say this yet, but I feel like, there's so Trump didn't get the guy he wanted for running the Senate, which was Scott over that Thune guy, which he just looks like the classic politician dude. So there's like that first kick, and then there was some bandied about like, Congress is just going to pass some ridiculous spending bill before the end of the year. And you hear that, and it's, we are disappointed in politicians in general. And then you hear that, and I'm like, you guys just, you suck. You basically, I'm sorry, you just suck. Democrats suck, Republicans, like, you guys suck. If that's how you're going to play this. And then, there's clearly people voted for, some kind of rational spending program. I believe at least the majority of voters did. And then Congress is like ignoring you, like for what purpose? I don't know. I guess, what is it? A giant money laundering scheme at this point? So little disappointing. Now, I fully understand government spending is economic growth, although you have to look at how many jobs were added to the economy in the last few years and how many were government jobs that we're going to have to raise taxes to pay for those. So I would like to see some, I would like to see things continue to move in the other direction. Congress can surprise me. This Thune guy can surprise me. I'm willing to be surprised. But right now, until they actually do something useful, I don't believe them. So we'll see what that comes out. And I think that's kind of part of, and I don't blame Powell. Like, Powell did the hard thing he was supposed to do. They screwed up on rates early. I think we probably, all of us, at least you and I, and probably Jim, agree. Like, you guys kept them too low for too long. Then you piled a bunch of spending on, did all kinds of whatever crap, and you end up with inflation, just like Milton Friedman said would happen umpteen times. Now we've got this, and now Powell's like, I did the hard part. I jacked the rates up, right? I tanked the market when I needed to. Okay, now we're pulling the rates back a little bit because inflation looks like it's not going up as much as it used to, but it's starting to percolate a little more again. Of course, government spending is out of control still. And he basically, I think yesterday as a reminder, he's like, listen, the job is not done. And why he just can't say, as the Fed chair, you guys are spending too much money like drunken sailors. Like, can he at least say it once? But I guess, we elected some people, and let's see if they say it, and Trump himself is not like, let's not call him a fiscal hawk. He certainly wasn't in his first term. I think he tried and got thwarted pretty hard. And then he just ended up passing a bunch of ridiculous budgets. So the spending thing now, I would argue again, we're down 2% from all-time highs. We were like just 6,000. We're at 150 points. It's 3%. So at least for right now, I would say the market, the bond market is like, okay, you guys have to start putting up because they're going to press rates. And I think that's kind of where we are now. Stocks, companies are performing, making money. We have NVIDIA next week, which again has been a vol event now every quarter since NVIDIA became so big. I think as it should be, right? It's the market leader as far as stock price growth and all that. So I think at this point, like, okay, Powell's like, okay, guys, I'm done. I'm not lowering rates anymore. You guys need to do something now. And I have to say, like, it's not like giving Michael Jordan the ball. Like, you give that guy the ball, he's going to do his job. Congress right now kind of has the ball. And at this point, I don't trust them, but I can be pleasantly surprised. And that's what I'm waiting for. So if you see a little bit of that, I think, VIX is 14 by Thanksgiving, but I think it remains to be seen. It's kind of a wild card, I would say.
A wild card indeed, listeners, as we roll out now, pun intended, to the land of the volatility surface. And surprise, surprise, it's looking a little bit firmer, a little bit frothier out there this week than it was a week ago. In fact, we had to just re-rack this right now because things are moving and shaking out there as we're coming into the start of this segment, listeners. We're seeing obviously a firmer front portion of the curve, that no future up nearly 1.7 points now from where it was this time a week ago. The D future up nearly a full point, about 0.9 out there. So looking frothy, looking firm. Again, we like to use that barometer of, is there a 20 handle anywhere in the offing? Those are kind of hard to find right now, listeners, given the fact that we have annihilated vol across the board. But if you go looking, if you go fishing, listeners, all the way out to July of next year, you can find an 18 3/4 or so. So you're starting to get back into the ballpark of sniffing a 20 handle, and that's mostly thanks to today's action out there with the curve firming up pretty aggressively across the board. Mr. Jim, you made the rookie mistake, dare I say it, of tweeting out a graph of the term structure yesterday, right before all this madness changed and the term structure changed markedly. First off, you should know better, sir. And then B, what's catching your eye out there today?
It is all my fault. An early celebration of a return to modest contango. Look, we spent how many months before the election with the VIX term structure just woefully flat and relatively low. So it's time for a little excitement, I gather. But I also pointed out yesterday and just reiterated out there on the X that the November contract expires next Wednesday morning. So it will behave very much in line with spot VIX between now and then. And that's what we've seen today. We've have spot VIX up, almost 3 handles. And that's lifting November above DEES. So everybody's freaking out. A backwardation. Well, that's the way it's going to be until at least next Wednesday. It's what I refer to as a punch in the face if you came into the morning short volatility.
Backwardation. If you're the once and future Dr. VIX and you say that term, folks will call you all sorts of mean names. Who knew backwardation could be such a contentious thing? But that's where we fall right now in the vol surface. And I joked with you earlier, Jim, but we have that problem all the time here, even on this show. We try to take a snapshot of the VIX futures, let's say, when the show starts. And even just a few minutes later, when we're talking about the vol surface, it's already changed completely. So once you tweet out a graph, Jim, all you're doing is asking for trouble on the VIX futures. They are just a high inflection asset, to say the least. Mr. Rock Lobster, a.k.a. the Dark Lord guy who's ginning all this up behind the scenes. What's catching your eye out there in a mostly firmer, mostly higher vol surface this week, sir?
Yeah, Jim just mentioned, we were in that happy contango. I was like literally 24 cents away from the option pit fair value for vol. We do kind of this funky thing where, given so many days to expiration, what does an average VIX curve look like? And this is all I've done by observation, so kind of the old school way. And we were really close for a while this week to getting to that spot. And we didn't quite make it. So now, you've got the December contract is lagging under the cash, and the November contract above. So you still it's one of those things where the front end is flat, and when the front end of VIX is flat, I assume that VIX really wants to move up or down. The deeper into backwardation we go, the more I assume VIX wants to climb, and the deeper into contango we go, the more I assume VIX wants to go down in the short term. So then I say short term, like the next week or two, and long term, 30 days and out. So, and that's kind of it's kind of what I would say flat, and it should be. So stocks are, we're down almost 1.5%. So that's like 24 vol. So everything I would say is at least reasonably priced. And given that we kind of sold off yesterday. So I think, so again, from a front end point of view, and I would say at this point, it would not surprise me if 14 or 20 plus is in the cards by VIX expiration, the November expiration. So that's kind of where I am on that.
That's a pretty wide spread there, Andrew.
I know.
Well, it's like the thing is, the flatter we are, the more I think the strangle and VIX is undervalued. So that's kind of how I trade it, to be quite honest. So that's what I'm doing right now. Like today, I've been unwinding SPY put spreads, and I'm about to start unwinding upside VIX call spreads, so to expose the downside again. It's just that we've made the move. But if I'm adding more positions on Monday and the curve is flat, I would just, I would buy more VIX strangles again. So that's how I trade that. I know everybody kind of does it from everybody has a different perspective about it, but like I don't buy strangles or a strangle like I would be doing now when VIX is in huge contango. Although I buy in the money puts and I'll buy junk VIX calls against them. But I guess it's how short a delta. So right now, I think it's better to have like gamma in the vol products, not necessarily a big delta in the vol products. I would say it like that.
So would those be your strikes then? 14-20 on your strangle?
If I was doing this so I'm doing this strangle for December. No, I would be closer actually, Mark.
I was gonna say it's not getting you much. 14. It's cheap,
yeah,
but it's not getting you much.
I'm setting up the strangle, not like the December 16 puts only $1.30, which is really cheap. Like the 16, so you could buy the 16-19 strangle for $2.70, right? And that strangle was almost 100% in the money a day and a half ago. So I would just buy that strangle straight out. Now, granted, right now I'm trying to unwind the last of my upside November that I have. Mostly because I've already sold my VIX puts, so all that stuff is I own for a huge credit, so I just want to get what I can for it. But like on Monday, I would revisit this if the curve is flat. So right now I priced the strangle around $2, and it's trading 260, probably 265, and it was near that, and VIX got to 1360. So when I view it like that, it's way too cheap in my view. So I'll just buy a gobble of those on Monday. Now, if we don't have the continuation, that strangle would still leave me slightly short delta, which is fine. And then see what happens. Now, the only thing I would do then is switch to maybe a call spread, try to lighten the cost and get the strangle down to below $2. And then so that's ridiculously low for where VIX is right now. Again, in my view, that's where the edge is when the curve is flat at 17 is a lot different than when the curve is flat at 22. So you actually have, like real upside. Like what did the brothers say there? Like you make your money above 20 and below 16 in VIX. That kind of 16 to 20 is hard to make any dough. So when they're giving you the upside for relatively little dollars, I think it makes a good risk reward setup, and that's how it is right now. So today I have to concentrate on closing the stuff I have to book the dough. But by Monday, if we are here still and the market hasn't changed tone, then I just start the regime up again for the month. And that's how I would do it. So you're right, Jim. It is a wide range, but they're giving me the $3 range till December, which are $2.70 for it. I just don't think that's very much money. But again, that's my view on that.
I think 16-19 a little tighter. I think we can get behind that. Mr. Jim, what are your thoughts on that strangle? A, and B, I saw you just tweeted out a warning to folks about the futures and VIX cash kind of moving in lockstep. You want to share that with the listeners, sir?
Well, yeah, it goes back to what I was talking about earlier. With the November contract expiring Wednesday morning next week, it is going to follow spot VIX like a puppy dog between now and then. And so the big move today is in spot VIX, and that's going to lift that contract. So we've gone from yesterday looking like relative calm had come back into the picture to this little upset today with stocks getting shellacked. That's pushing spot VIX meaningfully higher. It's still under 17, so it's not like the house is on fire quite yet, but it's a significant move from where we were and where I think most people thought we might be headed. And so every tick in spot VIX is going to be matched with a tick in that November contract until it goes away next Wednesday, and then we get to start over and see what December wants to do.
And what we want to do, listeners, is look beyond our shores for a little bit of international volatility.
It's time to explore what's happening in the volatility market beyond our shores. It's time for the International Volatility Review. The International Volatility segment is brought to you by Eurex, home of Euro stocks, VSTOXX, DAX, and the German government bond-based Eurobund, Eurobobble, Euroshots derivatives. Eurex is the leading European derivatives exchange. Learn more about trading VSTOXX futures and options, the European Volatility Benchmark, at www.eurex.com/VSTOXX.
All right, everybody, welcome to the International Volatility Review, the portion of the show where we cast our gaze beyond these shores, see what's popping off over there in the Eurozone, in particular, drilling down on a little product we call around these parts, VSTOXX. And VSTOXX looking a little bit frothier than it was this time a week ago. It was at nearly 17 and a quarter when it closed this morning, 17.21. That puts it up nearly half a point, about 0.44 from where it was this time a week ago. Now, obviously, this closed a few hours ago, so at the same time, VIX cash was hanging out probably around 15 and a quarter, somewhere in that level as well. So VIX hadn't really kicked into high gear either. So I'm sure VSTOXX, that's one of the challenges of sharing and comparing apples to apples with these listeners. By the time we kick off the show here, of course, VSTOXX has already been closed while VIX cash continues to rampage as we're seeing it out there right now. Frame of reference, of course, we're not even halfway to the 52-week high, which actually a little bit over halfway to the 52-week high, which was a little bit north of 31 back on August 5th. I think you can all probably guess the day that VSTOXX made its high. The low, mid-December, in fact, exactly mid-December of last year, 12/12 back on December 15th. Think we can threaten that again? Well, today's action would say no, but of course, mid-December, an eternity in the vol space. Literally anything can happen between now and then, listeners. Speaking of what's happening out there in VSTOXX this week, listeners, we have been seeing a lot of paper. So if you're intrigued, you want to watch this stuff, there's a couple of great ways to do it. Of course, you can go to UVX.com. That's the place where all things VSTOXX are held. Or, of course, tune into the show. We break down a lot of the flow for you as well. If you're really interested, hit us up. We can add you to the mailing list as well that Eurex puts out, which has all of the great flow that's going down here in VSTOXX for the week. And it is pretty informative. If you had that, you'd see there's some flow out here in VSTOXX land that's not quite the same. It's not quite apples to oranges as what we see in VIX land. And that's what makes it so interesting to me. Now, let's start out here. You have some of the trades you're going to expect. Like I was talking about myself and the Rock Lobster loading up on Nov 17 puts in VIX heading into the election. He just took his final ones off yesterday. I took mine off last week. Someone did the same thing last week in VSTOXX as well. They bought 10,000 of the D17 puts. However, it was markedly after the election. It was last Friday, exactly a week ago during our showtime on November 8th. So kind of a late time to be buying that vol downside. I mean, it still probably worked out at the end of the day, but kind of the trade I think you'd want to have on a little bit earlier in the cycle. Like, let's say, I don't know, before the election itself. Vol already took a pretty good drubbing by the time we got to Friday of last week. Today, not looking so great on that, obviously. And then, of course, the same day, just to show the kind of two-sided flow we're seeing out there, also saw 6,000 of the D's 28-34 call spreads. Also, our friend, the 1x2 put seller, is back. And I kind of want to get your thoughts, Andrew and Jim, about this as well, because this is a strategy we talk about a lot in VIX, but the other way. We see people all the time selling the 1x2, selling one call, and then buying two, or these days buying 3, 4, or 5 of the upside. Just look at all of our open positions in VIX options, and it's size upside, most of it on these ratio type spreads. And yet we're seeing a lot of the other way going up in VSTOXX these days. We talked about a lot of it a few weeks ago when Mr. Rhodes was on the show with us. He's been tracking these 1x2s. I think we had our friend come back again. I'm pretty sure these are the same strikes. I'll have to go out and see, even though he was doing it in November before. Then now it is the December 17-15 1x2 put spread went up just a few days ago. Looks like they did it 2,000 by 4,000 times. There probably more going up after that. So size 1x2 put spread. Obviously, if you're doing that, listeners, you want vol to crater, to fall out of bed fairly aggressively. So far, not exactly looking great, but time is on his side. He did do this out in December. I'm curious for you. Maybe, Jim, we'll start with you. This is something we talked about a little bit before on the show, but for whatever reason, not a strategy we see going up a ton in VIX. And for whatever reason, folks really seem to have embraced it in VSTOXX. What are your thoughts? Why don't we see more of these really aggressive ratio put spreads in VIX, sir?
Andrew's probably better positioned to talk to that than I am. I think I imagine that there's not a lot of crossover between the folks who are actively trading VSTOXX and the folks that are trading VIX. So you've got a little bit of a different geography, a little bit of a different mindset that has to play into that. Playing downside in VIX or VSTOXX, any place that you're betting that volatility is going to go away, has a positive expected return punctuated by severe bloodlettings. So whether it's VSTOXX or VIX, getting aggressive on the downside has a price that will be paid occasionally.
Mr. Rock Lobster, you will like this or maybe not like this. On our show last week, during our showtime, actually, someone did the reverse of the trade you were just talking about. They blasted away on the D1420 strangle. They did it 1,000 times, tied to short VSTOXX. You like your trade the other way, sir? How about that?
So they sold the strangle and then sold the VSTOXX?
Yes.
Well, those trades work great until they don't. I guess. Yeah, and they're like that. I'd rather. Yeah, I don't know. I don't know if I like that at 14. I think it's a better trade at like 22 or 24, or something where there's a little more meat on the bone that you're selling. But hey, as you say, c'est la vie, to each his own. Anyway, that's not my favorite. No, but the 1x2, like, a 1x2 put spread in VIX, like buying two, selling one, I think that's like an impossible trade. Very hard to make those pay. The 1x2 call spreads, I don't think are work better in VIX because they're generally long vega. So I think those do work. Just kind of depends how you structure them. And then we've seen some of those crazy like 4x1s and stuff like that that go up as well. And I can never exactly figure out which way they're doing it. But I could have sworn I saw one go up prior to the election that looked like kind of a Vegas sale to me, way out. Anyway, but as far as those go, I don't know. It's sometimes trades look good on a risk graph, but in practicality, there's a lot of lazy deltas in them. So you get one side performing, the other side isn't quite performing, which is what I would just kind of caution people on that kind of performance. So you get that squared away. But
that's a pop and Tums trade. You're selling that strangle and you're selling the underlying against it. You just don't want to sleep at night. That's all.
Yeah, or you have been indoctrinated into thinking that just selling the vol always works. Maybe you did it after August 5th and you're like, wow, this is an easy way to make money. And it was, because that was 100% right. But, you get more aggressive when VIX is lower. It's a little stickier of a trade. So like the long-term capital guys come to mind. What are they? They went like, how much 1 year Vega did they sell at 13? I don't know. It was a huge number. I date myself. So as Jim and I, I don't know how many hundreds and hundreds of thousands or a million Vegas they sold. So, because they only looked at data back to 1992 for some reason. So they did a vol study only going back to 1992. How they missed the prior decade of volatility trading is beyond me.
When genius fails.
Anyway,
well, it was hard to get that data, and so it's sort of like academics. They find a set of data that they can torture until it tells them what they want to hear, and publish a paper. So.
Yeah, exactly. Yeah, and then they're like, "Oh wow, now the data works great."
What could possibly go wrong?
What could possibly go wrong, indeed, listeners, as we keep on rolling out to the land of all things VIX options. Is VIX popping? We know VIX likes a little blood red on the screen. That tends to get the juices pumping out there in VIX land, listeners. And that is the case again today. Just as I'm talking, VIX just crossed the 1 million contract threshold exactly. So we are popping off again out there today, listeners. The ADV is 839, up about 2,000 this week, but spoiler alert, probably going to go higher after a day like today. What's open for size out there? Spoiler alert also, it's a lot of puts, 6-4 still in the top 10. So puts were dominating things. Maybe that's also a contrarian indicator at this point. Once we get to puts outnumbering calls in the top 10 out here in VIX land, maybe that is a sign that we have gone too far, listeners. Maybe that and people are blasting away at strangles and the underlying in VSTOXX. That's the bridge too far sign, listeners. Number 10, 229,000 of the Nove doubles. You know it's my favorite position on the tape, listeners. Now number 9, 233,000 of the D's 15 puts. If that doesn't do it for you, allow me to present number 8, 233,000 as well of the Nove 16 puts. Number 7, 258 of the Nove 20s. Number 6, 261 of the Nove 17 puts. Number 5, 266 of the Nove 35s. Number 4, 291,000 of the Nove 40s. Then we're right back at it, all puts all the time, listeners. Number 3, 317 of the Nove 14 puts. These are the ones we've been contentious for a little bit. Obviously not looking great today. Number 2, 376,000 of the D's 13 puts. I was thinking for a while there, maybe that was a bit of a bridge too far. Then we kissed a 13 handle in VIX Cash yesterday, listeners. So even those bridges can get a little bit closer these days. And then number 1, 388,000 of the Nove 15 puts. Obviously by the fact that these are all still open in D's, means they have not taken these bad boys off, which, I don't know. We'll see. Does this turnaround have legs, listeners? This just a little bit of a fit and start. We shall find out. Today, action-packed day. 1 million contracts on the tape already. The big dog today, go figure, it's more puts. 107,000 of the Nove 15 puts, followed by number 2, 81K of the Nove 13 half puts. Number 3, 60K of the D's 14 puts. Number 4, 47,000 of the D's 16 puts. And rounding out the top 5 on a pretty banger Friday, 36,000. Got some calls finally. All it takes is VIX to move a couple of points. People start trading some calls. 36,000 of the Nove 17s. Yesterday, listeners, 736 on the tape. The big dog, 51,000 of the Jan 30s, followed by 50,000 of the Jan 50s. This is an interesting one, this Jan 30-50 vertical. I'd be curious to maybe get Jim and Andrew's thoughts on this in a little bit. We were talking about this yesterday with our buddy, Mr. Matt from Orats. It's an intriguing vertical out there. It was only opening, at least for size, that we could tell on the 30s. There is some open interest on the 50s out there. Doesn't have the whiff of a roll down, though. It has the whiff of a straight vertical. Number 3, 43,000 of the D's 14 half puts. Number 4, 41,000 of the Nove 13 half puts. And number 5, 36K of the D's 15 puts. Wednesday, another banger day, 941 on the tape. The big dog back to those Nove 15 puts. Folks love them. 123,000 changing hands on Wednesday, followed by number 2, 70K of the Nove 20s. Number 3, 55,000 of the Nove 16 puts. Number 4, 50,000 of the Nove 14 puts. And bringing up the rear on a banger Wednesday, 35,000 of the Nove 19s. Tuesday, no slouch either, 883, almost exactly the ADB right now. Number 1 gets you to 72,000 of the D16 puts, so more puts all the time, listeners. Number 2, 56K of the Nove 15 puts. Number 3, 40,000 of the Feb 40s, 4 O's. Interesting. Number 4, 37,000 of the Nove 16 calls. And bringing up the rear on an active Tuesday, 35,000 of the Jan 15 puts. And lest you think we got out of the gate very lazily this week, nope, 1.01 million contracts on the tape on a banger Monday as well. Kicking us off, 100,000 almost exactly on Monday of the April 39s. As I recall, that was part of an April 1x4, I believe it was. So again, talking about all these ratios we see for size all the time to the upside in VIX, not so much to the downside. Why is VSTOXX the lone player in that? I'm curious, listeners. Number 2, 90,000 of the Jan 17s. Number 3, 81,000 of the Nove 15 puts. Yet again, a hot strike. Number 4, 50K of the Nove 16 calls. And rounding out the top 5 here, 47,000 of the Jan 16 puts. Mr. Rock Lobster, we'll start with you. What are your thoughts on this Jan 30-50 vertical? Went up about 50,000 times yesterday. And then anything else catching your eye out there in the VIX paper this week, sir?
You know, it's funny. I don't know about this week, but they're buying puts in VIX today. Just saying, that they're buying them today. I haven't seen a ton of VIX call paper today, to be honest, but I could be totally wrong on that. I mean, clearly the volume is huge. And they're buying up a lot of the November. Like I'm just watching, oh, wow, the Nove 17 calls have now blown up to $1. The Nove 20s are 40 bid now. Even like there's a bid for these into the close here. So I saw a lot of put buying. 100,000 of the November 15 puts have traded. So I think this weekend will be one of those, you know, are we freaked out about rates or are we not?
Are you saying it's a Russell's secret UVIX weekend trade weekend? Is that what you're saying?
Well, of course, yes. You'll be buying it at the perky top, but what the heck? Because
can I tell you a spoiler alert? I already did it. I bought it this morning. So I'm laughing all the way to the bank on this stuff right now. I'm loving it.
I would assume that you are. So it's definitely a nice looking trade right now. But you know, I mean, how much news is going to come over the weekend and how much will all drop by Monday? You know, not a ton. So it's kind of I don't know. It feels like kind of a low risk. I feel like anyway, it feels like a low risk weekend play, to be quite honest. So, but anyway, from a volume point of view, now all of a sudden, you know, there's a bid for some upside. So, hey, you know, we'll see what happens.
Jim, anything catching your eye in the maelstrom of VIX paper before we get into some of the ETPs, sir?
Nothing really catching my eye. You know, I think people are still trying to figure out what the post-election strategy needs to be. And I think there are probably we did hit 6,600 in SPY. We did, get to that almighty level. So, it shouldn't be a surprise that there's some people who look to hedge some of that on the theory that it won't stay there forever, at least in the near term. And I go back to how many years ago was it when somebody at the EQD conference made the MAGA hat, the Make Volatility Great Again. And I suspect that one of the hallmarks of the next presidential term will be that, in fact, volatility finds its way to be great again. Not necessarily on a sustained basis, but I just wouldn't be surprised if from time to time things are disrupted here and there, and that markets will fluctuate and opportunities will present themselves to be to take either side of the trade.
That would be interesting. We have a question of the week exactly along those lines. Is it going to make vol great again next year? Are we going to see the death touch that Trump had for vol last time he took office? Let's run through some of these vol ETPs, listeners. SVIX, your beloved, maybe you hate it, inverse vol product, 2610. That puts it down exactly 2 points right now from where it was this time a week ago. Starting to see some paper pop off out there, 4,700 contracts on the tape. But it doesn't sound like a lot. That's because it's not. The ADV is 6,300. That's come off quite a bit. I have said before, they have added weekly, something I've been beating the drum about for a while out here. So that should hopefully over time improve things. Right now, the markets in those weeklies are pretty rough. You're looking at, nickel bid at, $2 for some of these options. So good luck getting in between those goalposts. But maybe we'll see a little bit of a reverse of that today. Its sibling product out there is SVOL up a half a point. They were on the show not too long ago. We were talking, Russell and I, about this product. I haven't had a chance to sink too much teeth into it yet in terms of the analysis, but looking at the recent performance of SVIX versus SVOL just over the last week and a half post-election, both starting from a very similar price level. I think SVIX was around close to 22, like 21 and a half, and SVOL was around 20 and a half, 2090, I believe. And after that, we saw SVIX pop 6 points roughly, and SVOL pop about exactly a point. So if you're looking for a performance, seems like we have a clear winner, at least for right now. Certainly from a liquidity perspective on the options front, it's not even close. If you think the liquidity is bad in SVIX, SVOL's doing 311 contracts a day. Now, it's a newer player. Those things can improve. I will say the performance over the last week and a half does give me some pause, but I am willing to keep an eye on it and just kind of evaluate how this thing performs out there. I need to sink my teeth into the methodology a little longer. Speaking of methodology, I did mention earlier, I never do this, listeners, but I know Russell in the past has talked about buying his UVIX for his secret weekend trade during or even before showtime sometimes, which usually I don't like doing. I don't like holding a wasting asset in my hands like UVIX, but today it seemed like the animal spirits were with it. Of course, as Jim was saying earlier, we're now in this position where the cash and the futures are moving in lockstep, where when we're moving up, that does help lift UVIX as well. So I had the spirit in me, bought UVIX much lower today, so feeling happy about that one. Probably going to ride it through the weekend, not going to let it go now. This is definitely an environment where we could have some weekend risk. If we don't have it, of course, can let it fly on Monday. UVIX right now, 410, up a third of a point. If you want more of a deep dive into that fun stuff, stay tuned for Oddities, where we talk about our trades for the week. I'm sure Matt will have some thoughts about that fun as well. Of course, theoptionsinsider.com/pro, the place to go to get access to that. Right now, UVIX popping off today, 66,000 contracts on the tape. We have not seen this in some time. So clearly the folks who were looking for UVIX to come back to life to trade it again, they're having a ball, including 11,000 of the no fours expiring today. We do see this a lot. Expiration day flow in these products like UVIX is huge, and we're seeing that today, especially as we're flirting through a strike, hanging out 410 right now, so a dime through that strike. Folks dialing up those fours hot and heavy out there. 66,000 contracts trading today, including nearly 12,000 of the fours already, and about 10,000 of the fours that expire next week. Mr. Jim, I just ran through a bunch of stuff. Anything catching your eye in either SVIX or SVOL or UVIX, sir?
Well, we've had a big one-day turnaround here because coming out of the election, it looked like it was time to short volatility, and we did see a nice bounce in SVIX and a bit of a flop in the various long vol products. You mentioned SVOL, and I would draw people's attention to the differences between SVIX and SVOL. They do both address the short volatility opportunity. SVIX does it in what I would refer to as a more concentrated fashion, where SVOL does have some exposure to short VIX futures, but dials it down very specifically. So, you're not going to see the same responsiveness from SVOL in either direction that you would from SVIX. And so people just need to understand that they're designed to be different animals. And in fact, the SVOL product is really partially designed to roll positions in the VIX futures and essentially pay out any profit that's derived from favorable roll in those VIX futures. So, but this today, to call today, I think I referred to it earlier as a punch in the face. The punching just keeps coming as we see spot VIX, move up above 17 and the VIX futures take it on the chin. It's one of those days where if you're short volatility, you're not feeling very good.
No, indeed. And that's a good thing to clarify. I mean, obviously, they're not quite apples to apples when you're talking S-Vol versus SVIX, but people are going to look at them in the same context. So I like laying that out for them.
I agree.
Because that is how people are going to view them. Should I buy the SVIX or should I buy the S-Vol? Should I trade the options on one versus the other? So if you're expecting apples to apples, I just want to make that clear for you out there. You can look over the past performance over the last 2 weeks for yourselves if you want to see that clearly. Mr. Rock Lobster, we got to get to the crystal ball, but anything catching your eye in your beloved SVIX or UVIX or anything else out there, sir?
Mostly the illiquidity is a little bit off-putting, to be quite honest, in SVIX. So I would like to see more liquidity in there, a little bit higher quality, but it has yet to materialize.
Has yet to materialize, listeners. It's our crystal ball, so let's get to it.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball, the portion of the show where we attempt to wrestle with the vol gods. We spit directly in their eye and we say, we can figure you out. Sometimes it works. Sometimes not so much, listeners out there. As we're coming into the end of the show, all I can say is things are looking frothier. Things are looking firmer out there. Maybe a good day to have some levered vol in your back pocket for a rainy day. S&P off over 1.5%, about 1.55% coming into the end of the show. Dow closing in on about 0.8% right now, so closing in on 1%. NASDAQ off 2.5%. And VIX cash north of a 17 handle right now. Just coming into the end of the show, we're at a 1742. So VIX cash actually leapfrogging VSTOXX right now at a 1721. Let's go look at our levels out here. I was at 15.25, 1635. So no joy for us out there. Mr. Meatball was doing his palindromic nonsense on VIX 1331. No joy for him. And Zed Francis was with us last week. He was 1548 on VIX and 1688 in VSTOXX. So he was the closest on VSTOXX, not quite within our margin of victory, but looking decent out there. So that means our guest did the best last week, Mr. Jim, which gives you the dubious honor of going first. If you want to do both, have at it. If you want to just field VIX, that's all you can handle. Either way, sir, have at it. The floor is yours.
Oh, what the heck? I got VSTOXX on my screen, and we want to keep everybody happy. I am not convinced that today's little disruption is going to sustain itself for a week. Maybe it will. I'm not putting any money on this, but I'm going to say next week, got VIX at 16 and VSTOXX at 1580.
1580 for VSTOXX, a little bit of inversion, kind of like we're seeing out there right now. Mr. Rock Lobster, same question for you, sir. What's popping off in VIX and VSTOXX on your radar for next week?
VIX popping off, and then I'll do my crystal ball. I'll go 1550. I hate to scum Jim, but I'm gonna go a little lower. I don't believe this is gonna stay where it is, unless of course Congress messes us up. But maybe they'll just be quiet for a week. So 1550 VSTOXX. Oh gosh, I got to pull up my VSTOXX here. That would be, VSTOXX. I'm going to say 1575 for VSTOXX next week. And hop on over to optionpit.com. And it's a week before Thanksgiving. Let's see how much action we can get.
Yeah, that's true. We do have a holiday starting to come in the offing as well, so that could affect the vol. Right now, listeners, vol's looking frothy. Does seem like lately the animal spirits in the markets have turned. We are looking a little bit red. So you know what? I'm going to be the contrarian here. I'm going to say the vol premium is going to persist. I'm going to say we're pretty close to this level again this time next week. I'm going to say 17.25 for VIX, and now the question becomes, do we have an inversion in VSTOXX, or do we have VSTOXX maintaining a bit of a premium out there? I'm going to say 16.55. So actually VIX cash kind of doing a little bit of what it's doing again today. Obviously when VSTOXX closes earlier, we can have a little bit more room to run with VIX by the time we get to it on the show. So that could usually account for a little bit. In my case, I'm going to say it's going to be close to about 0.7 out there for VSTOXX. All right, that's going to do it for us on the show this week. Of course, Mr. Jim, if they want to check out what you have cooking over there on the Twitters, where should they go? What should they do?
At VIXologist on the X/Twitters is the best place to keep track of what I'm talking about in the volatility landscape.
There you go, at VIXologist on the old Twitter. Look for him to tweet out some more term structure graphs. Then maybe after that, just buy a VIX Strangle, listeners, because you know things are going to pop off the second he posts one of those. So Jim, a great indicator, a good follow. Give him a follow over there at VIXologist. While you're checking things out, you know where to go. Public.com/VV. It's literally the easiest landing page we've ever promoted here on the network, listeners. So they're specifically looking for you folks, the vol trading crowd, the VIX, the VSTOXX, hardcore vol traders of the world. Public thinks they're ready for you. I warned them. I said, before you come on Vol Views, you better be ready for the hardest of the hardcore to come over and kick the tires and light the fires on their platform. They said they were. They created a whole landing page just for you, public.com/VV. It's literally the easiest thing you could do to help support the show that's been coming at you for over a decade now, crunching vol for you, talking you off the ledge for over a decade. The least you can do, head on over to public.com/VV. While you're there, kick the tires and light the fires. Maybe get a rebate or two. Not the worst thing. And of course, for all you super demanding bleeding edge folks, maybe you want super elaborate vol skew curve, something like that. Tell you what, you're coming from us, so the public folks will probably listen to you. They really want your feedback on this brand new platform that they have out there. Begin your journey, public.com/VV. It's a great way to support the show you've been listening to for a long time. And while you're supporting the show, head on over to urx.com/VSTOXX. That's the place to get access to a lot of this data we're talking about. You can also see ways there to sign up for this newsletter. If not, reach out to us. We will get you on that list, because it is fascinating to see just the list of institutional flow and what's going up out there for size in VSTOXX. It'll help give a little more clarity to your analysis of the international vol space. So hit us up over here. Just questions at theoptionsinsider.com. You can reach out to us over there on the old social medias as well, at options on most platforms. We'll get you signed up for that newsletter. It's fascinating stuff. You want to check it out. urx.com/VSTOXX to go to learn more. This is going to do it for us on the on-demand side for this week. I want to thank everyone who joined us throughout the week on all of our shows. Remember, it's all available on demand on our podcast feed. So if you're not listening to the whole network, again, another reason to subscribe to the full network. You can check it out at your leisure. I know we have a great cadre of people who tune into Vol Views. It's their Saturday listen while they're hanging out, while whatever you're doing, mowing the lawn, whatever you're doing on Saturday, you tune into Vol Views after the fact. We love you all, however you get it. Thanks for listening. For those of you in the pro, theoptionsinsider.com/pro. I will be back in a little bit with our buddy Mr. Matt from ORATS to crunch a whole bunch of unusual activity flow. If you know Matt, he's always got some bangers in his back pocket. Should be a great time. If you're not on the pro yet, what the heck you waiting for? theoptionsinsider.com/pro, the place to go to learn more. Back again on Monday with the option block. We'll all see together if this vol pop is short-lived or not, all the way through to next Friday, another episode of Volatility Views. Stay safe out there, everybody.
If you're paying $0 to trade options, you're paying too much. That's because at public.com, you can go a step further and earn rebates on every single contract traded. No commissions, no per contract fees. That's table stakes. When you place an options trade at public.com, you not only don't pay, you earn a rebate. And those rebates can add up fast. Public is the only options trading platform where you can earn rebates. You literally won't find a better deal. So, switch to Public and start getting rebates on every single contract traded. Or stay with your current options trading platform and leave money on the table. The choice is yours. Public.com. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. The International Volatility segment is brought to you by Eurex, home of Euro stocks, VSTOXX, DAX, and the German government bond-based Eurobund, Eurobobble, Euroshots derivatives. Eurex is the leading European derivatives exchange. Learn more about trading VSTOXX futures and options, the European Volatility Benchmark, at www.eurex.com/VSTOXX. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.